All right. Let's do a weekly outlook or a daily review. Let's review today. Got the indices up right here. Looking at the continual contract for ES and NYM, S&P 500, Nasdaq, and the Dow, the dirty 30. So market is bullish. And let's see here. Oh, let me open. Here we go, baby. All right, snack break.
Snack break.
There you go. So bullish. Looks like we're just getting a simple pullback right now, pulling back in the range. I'm not saying that this thing is. I'm not trying to pick the top. We're going to lean towards the bullishness. Lean towards the bullishness of the market. So currently, we can see that fair value gap right here. It's still holding price up. If the market wants to disrespect that, there's a good chance that this would likely want to seek some lower prices. And there is no fair value gap on ES, but we do have this down close candle holding price up. And the Dow is kind of lagging behind here. There's relative equal highs. It does look like it is working higher because it's not quite breaking down. And holding that buy side imbalance, sell side inefficiency still. Not really going anywhere. A little bit of consolidation above all-time highs. So I do think there's a good chance that the market could reprice down a little bit lower. So I'm going to move to that gap right here. We'll be able to see that a little bit more closely as I move into the intraday charts. Focusing on, well, let's do ES first. We'll do ES right here. Do ES first and weekly chart. Market has taken out the prior week's high. Clean this chart up here. Market has taken out the prior week's high, traded back inside the range. It is not out of the realm of possibility for the market to kind of trade back down into the old all-time high. Let me just do set for the current contract. So that would look a little bit differently. So coming back into this range here, that's a possibility that it does go, into these lows and works this weekly imbalance. It's not really showing that yet. There is FOMC this week. Let me double check the economic calendar on this real fast. And Forex Factory. I do think the economic calendar is tomorrow. So we get the FOMC meeting tomorrow. So that's kind of the big thing. I'd say the market's kind of hanging out for the rate decision. And then we'll get the expansion from there, whatever they want to do with the market. But structurally, it's bullish. I'm not in the business of trying to pick tops and bottoms. So I'm going to be looking for, my base case is continuation. And then we might be just experiencing a little bit of pullback. Not the cleanest of delivery here. So let me go to Nasdaq. Get a little bit more lipstick on this chart. So that was kind of my 27,500 was basically, I'm just going to round up on that kind of. 500 is where the market, I think, is going. Trading down into this range. Let me get down into intraday. I can say holding that imbalance and get into the intraday charts and see what the market did and where it was going. So I was looking at this dealing range from this low to this high. I was anticipating the market to trade back down into a discount of this range and to look for some internal liquidity. This naked, I'll get into that. But I do like the idea of this volume imbalance being traded to. So I do think that lower prices is still in the works right now for Nasdaq. So possibly reaching down back into this new week opening gap. We're getting pretty close to it. So it is possible that the market wants to go down there. If I go to regular trading hours, this was the naked that I was referring to, is between that wick high and that wick low. The market never traded back into there. So I was anticipating the market to actually trade and drop some candles into this range. That was a draw, nice easy draw lower for me. So that was kind of my higher time frame key levels that I was kind of looking at today. And the market did most of that overnight and in pre-market. So dropping down to the hourly chart, kind of have this all annotated. Notice that we're getting breakaway gaps here. So I'm anticipating to see the market kind of straight up. And I'm wanting to know if, first of all, we have this inversion fair value gap here. There's two of them. So it might clean up a little bit better on the 2-hour chart, which it does. So the market could easily trade back up into this range here. And I'm generally using a 2-hour chart. But the market could easily trade back up into this as it supported price higher here and then failed and broke down. So the market gapped lower today. I guess I'll do that on the lower time frame. But we got a breakaway gap here, a breakaway gap here. So I'm looking for this series of up close candles to potentially support lower prices. I'm just going to trade all the way back up into this range. So I'll be looking for this these down close candles to kind of act as a propulsion block if it's able to get above there and work its way higher. Assuming it's going to take out the lows here. Not the lows, go into this volume imbalance, which I like the idea that it does. So I still am liking lower prices. There are some relative equal lows down here that my eye is drawing towards. So it depends if it wants to get animated, a little bit more animated to the downside. The market could easily work the lows down in here. But before it does that, it has to hit here, and then the new week opening gap, and the old all-time high. So going down into a 15-minute chart, there's relative equal lows right here. So just working this range, I like the idea of the market trading lower. It's already taken out that sell side here. That was a low-hanging fruit liquidity pool that was sitting inside that naked area from the regular trading hours, meaning the market didn't trade there during the regular trading hours. So getting down to the 1-minute chart, we can see that most of the day was spent inside the opening range. That's the opening range low, and the opening range high is right here. All this is the opening range. Majority of the day was spent inside of that range. Traded underneath it. Couldn't get anything going before it just kind of worked its way up and closed back inside the range. The market gapped down. Pretty large gap because the regular trading hours closed. So I like the idea at the open of it repricing higher. I was looking for this pre-market high to potentially be a draw liquidity. And I like the idea of it trading up higher and going lower. It didn't quite reach where I would wanted to see it go, but it did go to the lower quadrant. Very easily went to the lower quadrant. And fell shy of the pre-market high there, that 7 a.m. high. So the market opened up here, traded lower. I looked at that as the market trying to induce people to trade, to say that this thing is going to be a gap and go. Just be heavy, break down traders, people shorten this right here, and then boom, it shoves it down their throat. So I took a long in this right here and closed out the full position right at the opening range gap, lower quadrant. So real kind of simple. And that once it did that, it broke up. It made one more leg higher before it broke down. Had a market structure shift here. This is a 5-minute fair value gap, 5-minute BISI. You can see that it's right here on the 5-minute chart. See how the market supported the price here, went higher once it broke down below the low. Market used that as an inversion to send price the pre-market low, and also of this range, these low right here, falling shy of the volume imbalance. The market's falling shy of this volume imbalance. I do like the idea of it going back to it. So not showing, to me, this is not looking like it's uberly bullish, that it wants to just rip this and rip higher. There is relative equal highs up here, so I'm not sold that it's done. I do think that it might want to just seek a little bit more discount, possibly taking out the relative equal lows down here. So I do like the idea of the market trading lower. So, kind of recap what happened. We had that bullish move up, and then the breakdown with the market structure shift here, trading from high to low. After the market structure shift, dropping a fit on that. They gave a nice optimal trade entry with a fair value gap right here. This is also the 2022 model. Comes up in it, trades lower, trades down a good one standard deviation, taking out the pre-market low, which lines up with that sell side liquidity pool that's sitting right in here. Now this opening range gap, if I extend that opening range gap from Friday over, that is this is the naked part. So what's left unfilled of it is right here. Now, if the market wants to blast off and leave these imbalances here, then that's telling me the market's really strong. They're easily going to work the high right here and then go make its way up to 27,600. But right now, I'm looking at an hourly chart that's telling me that we have breakaway gaps. It's telling me the market has breakaway gaps. It is respecting this imbalance right here. That is inspecting that imbalance right here. So what I will be watching for is if the market is going to hold this and trade lower, or is it going to disrespect it, trade higher, and work its way back up to new all-time highs. That's what I'm looking at right now. Back to what happened today's price action. So the market traded up into that, breaking down. That was the OTE entry. Nice move lower. Coming into the lunch hour at about 11:30. That's when you can start seeing some of the lunch session take place right here at 11:30, and bring that all the way up to 1:30. So that lunch hour, which is 2 hours. We can see that the morning low, the AM session low, was taken. We had a movement up. And here was a market structure shift. Not the cleanest delivery, but nevertheless, the market did trade up, took out the low, placed higher. Choppy delivery, trades lower. Order block right in here. Order block holds. Fair value gap. Picks up a high. Chops around, and then for the afternoon session, works its way up, following shy of taking out the highs. So if we measure the high below here, like that, nice easy trade would be to the swing high that was put right here, which is still in discount of that range. There's the equilibrium, and working its way up to about an 89.5% retracement before it kind of peters out for the rest of the day. So I had a nice bullish run for the afternoon, retracing some of this, and we have a swing high here that was taken as the market worked up higher. I was not part of any of this trading session, but we can see that that's what the market did. And that's about it. So I'm not sure how they're going to be working I'm not sure how they're going to utilize tomorrow's event, but we can assume that the AM session is going to be a high resistance liquidity run, and generally is the morning of FOMC. But I still am leaning towards they're going to see some delivery down here inside of this volume imbalance here, which is really easy to see on the 4-hour chart. Right there, I do like the idea of the market trading to that. So we have two. We have two.
It's really short.
Fair value gaps right here. So I like the idea of it leaving a portion of this one if it's going to retrace up higher. I like the idea of it leaving a portion of this one unfilled.
And it's kind of like favorite, but it's
working low. And that's a wrap. See you tomorrow.
See you tomorrow.
Bye.
Bye.